This is the briefing for Friday, April 10th. One of the things I've been talking about in these briefings, and I really want to kind of reassess it tonight, is the fact that we have to understand the environment of the markets that we're trading in. And currently, the environment of the market is based on news events, specifically those news events coming out of the Middle East. So a lot of times the fundamental and the technical aspects of the market are very difficult to use in strategizing the market, mainly based because you never know what the news is going to be either overnight or the next day. That can change the perception of value on the part of traders and investors. So with that said, we still can't put our heads in the closet and not do anything, but we carry forward with the tools we know as a trader to understand and try to analyze the markets themselves. And one of those key things is understanding the development of the market as to where key reference areas are, in other words, support or resistance areas. And then as we come into those areas, we'd like to know, is that trend going into that area, is it strengthening or is it weakening? And so basically an analysis of the market internals will give us that indication. In this environment, we can do that strategy and understand the development and structure of the market through the analysis that we do, but we also have to understand that that analysis could completely change the next day should there be a news event or overnight news event that we just didn't anticipate and we're unable to anticipate. So with that said, let's go forward and see what we've got going into the weekend and expecting for potentially next week. Now, this is the gap that we saw on Wednesday that gave us the news was that we were having a potentially an end to the Middle East war that's currently going on. And then, of course, the rest of the day, it was basically just a muted day and just a day of rotation. A little bit of news came out overnight, Wednesday night and into Thursday. We got a little bit of a spike higher on Thursday, a little bit of follow through, which was nice. And then we saw just the same thing, a rotational pattern. A little more news comes out. There may be some doubts as to whether the Strait of Hormuz are open. And of course, we got this little bit of rotation back to the downside to see what's happening. But what's important here is that we are just above a shorter term key reference area, that being the 676 level in the spiders, and in the Qs we're looking at about the 608 area, and in the IWM representing the Russell we're about 261 area. Now the important aspect there is that's going to be support, but it was resistance going in. This was Wednesday's trading, so this was resistance coming into Thursday, and you can see it was broken through as well. So what we're going to be looking for now, what we need to look at now is what's happening in this move here. So is this move strengthening or is this move weakening? The same thing with the Qs and the same thing with the Russell. And as you can see, this is volume in the S&P 500, or I'm sorry, in the spiders. So you can see what's happening. This was the opening on Wednesday, and then you can see what's happened with volume going into the close today. So volume is absolutely collapsing. This is market breadth in the S&P 500. You can see that it is collapsing as well. And in fact, in today's trading, it is negative 231 shares. So we went from a high of about 341 shares positive on Wednesday to a negative 231 shares negative on today's trading. In terms of net volume, this is up volume minus down volume. You can see that it is basically flat and or declining. Now looking at the Qs, you can see volumes doing the same thing. This was the open on Wednesday, and then it absolutely collapsed from there and continues to decline. And then you can see what happened with this is NASDAQ breadth declining, pretty big divergence. As you can see, the rise here, and then what's happening with market breadth through that whole thing. Net volume being basically flat. Same thing is occurring with the IWM. This is IWM volume that is basically flat. Really, I'm not sure it could get much lower, except for trading to stop. And then, of course, you can see what's happening with Russell breadth, and Russell net volume is declining as well. So it's pretty easy to see that while the opening move on Wednesday gave us a pretty good indication that we were going to see potentially higher prices, we got higher prices. But what these internals are telling us is that this rally is not attracting new buyers or more buyers. In fact, the buyers that were there are waning. So that suggests to me that I want to be very cautious in going forward. Now, I've found from a probability perspective, and this is not statistical, that when you see a divergence like that between price and the internals, it is always a higher probability that the internals will correct to, that the price will correct to the internals. There is always a lower probability that the internals will correct to support price. Typically that happens around a news event. So as you see this happening here, this rally that we're seeing here, and you're seeing the internals not confirming it, the higher probability is that we're going to see price reverse because this is not attracting more buyers, and more companies in the index itself are beginning to trade lower as opposed to higher. So it's just a matter of time before we see price correct to the internal. Once again, there's always a lower probability though and there's always a probability that the internals will correct to price. And that typically, as I found, is around a news event. And there are plenty of opportunities for news events in this current environment in the markets. So let's look at where we are in terms of the little bit longer charts on a daily chart. Very important support area in the spiders at this 670 area, and you can see we're basically in no man's land. So the high of today would be the next level of resistance. The low from Wednesday would be the next level of support. Below that's going to come in about the 668 area in the spiders. And then resistance is going to be all the way up to the 698 area. That would be the all-time high, and this high going right through here. And you can see the rotational pattern that was occurring in the spiders going all the way back to October of last year. Then you get another rotational pattern right at and around the upper extreme before we see a breakdown, and of course a breakdown to test this lower extreme at the 630 area in the spiders. Once again, you can see on a daily basis that volume is falling off in the spiders. 52-week highs minus 52-week lows, only 38 shares positive. And then, of course, market breadth in the NYSE. This is NYSE opposed to S&P 500 breadth, and then net volume declining as well. In the Qs, you can see basically the same chart pattern. Came off of this the 560 area, bounced, traded through the 580 area, and then, of course, we're in no man's land right now. But so once again, the high of today, the low of Wednesday are going to be your initial support and resistance areas. Next level of resistance is going to be about the 620 area, and then above that is going to be this all-time high coming in right around the 636, 637 area. Once again, look at volume in the Qs, look at breadth in the NASDAQ, and net volume in the NASDAQ as well. This is the IWM representing the Russell 2000, and you can see that the move down here, testing this 240 area, not quite making it all the way down to 230. I thought really we would see this complete rotation in terms of the IWM, but it became a lot stronger than the other two indices, at least initially off of this bottom. You can see the gap on Wednesday. Volume absolutely collapsing on the IWM. Breadth in the Russell collapsing already, negative 622 shares. in today's trading, and net volume negative as well, meaning there's more selling volume within total volume than there is buying volume. Looking at where we are in terms of overbought and oversold, we're at a point on Wednesday of being overbought. That was worked off yesterday and in today's trading, and we're basically neutral. So this really doesn't give us an indication until we get to an extreme indication here as to whether we're going to see the market, whether there's a higher probability of a market moving higher or a market moving lower. A lot of times when we get an extreme reading like this right here, it'll either give us an indication that we're potentially at a high, if that happens to be at a resistance level, or that we're going to see some type of pause or slight rotation to the downside to work off an overbought condition and bring this indicator back down into either an oversold condition or a neutral condition, as we see in them both right now. Now, as I said, one of the most important things that I've looked at recently, and it gave me great concern earlier last week, was the percentage of stocks above its 20-day and 50-day moving average. You can see it was this is the S&P 500, the percentage of stocks above the 20-day moving average. So you can see it was down to only 63 shares in the S&P 500. We're trading above the 20-day moving average, and the percentage of stocks above the 50-day moving average was coming in right around 94 shares. That was giving me some real heartburn in terms of what potentially we could expect if that trend continued. But of course, the news hit, and we had a complete reversal. You can see what's happened in terms of strengthening today, closing in the percentage of stocks above the 20-day moving average at 332 and 218 in the S&P 500. While we still have a ways to go, this certainly is more positive than what we saw down in these areas down here. And I talked about it in the weekend or the weekday subscriptions subscriber edition of the briefing, and you really was giving a warning that if that continued, we potentially could see some acceleration to the downside, which fortunately we did not see, and we got this nice bounce, and we'll see what happens from here. In terms of the NASDAQ, you can see the percentage of stocks above a 20-day moving average all the way up at 2,948 shares. Really coming back in at almost the high that it's been for quite some time. Percentage of stocks above the 50-day moving average, you can see what's happening here as well. We had a little bit of a dip down yesterday's trading, but then this came up higher. Now there's some anomalies in the market in the NASDAQ. I believe there were a couple stocks affiliated with the Bitcoin, and I know that Palantir had a pretty bad day yesterday, so that may have affected this here. I know it affected my total volume numbers in the Nasdaq, and that's kind of skewed my charts here for quite some time. In terms of the Russell, you can see recovered nicely, percentage of stocks above the 20-day moving average and percentage of stocks above the 50-day moving average as well. So we got some strengthening within the market in terms of the longer term development, but in terms of the shorter term development, the indication that I'm getting right now is that there's weakness coming into the market. These volume numbers are really reflective of the fact that we're not attracting new buyers to the market, and that should be a warning flag in terms of volume, market breadth, and net volume. Should be a very interesting week, especially if we get some news over the weekend out of the Middle East, and I believe there's a peace talks going on Saturday, tomorrow. So it's going to be just a very, very interesting weekend, and it's going to be anybody's guess is if there is news that comes out, whether that is going to be good news or bad news. The price of oil is driving the fear, and the markets are reacting, the stock indices are reacting based off of the fear that's coming into the oil markets. So we have to keep an eye on that as well. In the meantime, have a great weekend, and I'll pick this back up again on Monday for subscribers.